Welcome to Profiling to Profit. It is Saturday, May 14th, 2016. Last week was another crazy volatile week, and sort of the theme going forward into this next week is one of caution. We'll cover that quite a bit over this video here, but let's get started. Let's take a look at the economic news coming out for next week, starting Monday, May 16th. Typical news, we do have some speakers out, a lot of Fed speakers here in the United States that will be talking, and again, when the talking heads prevail, then the market moves. Now, we do have a red news that I will point out. It's the FOMC minutes on Wednesday, and that's 2 p.m. Eastern Standard Time in the United States, so keep an eye on that. That will be a market mover. Then there's just the regular news. CPI is out this week, as it is also in Europe, and then existing home sales on Friday, the regular Thursday jobless claims, et cetera, et cetera. So keep an eye on the news events. Over in Europe, as I mentioned, ECB has their monetary policy meeting on Thursday, I believe it is. Thursday, May 19th. So keep an eye on that. And also Wednesday, the European Union puts out their CPI as well. So keep an eye on economic news as it relates to your trading and also your positions. All right, let's get started here. As I mentioned, let's start with the stock indexes. The last week was really sort of a volatile week, and let's take a little closer look into here. As price moved down the previous 2 weeks, we saw some consolidation here, which we really like, the balancing of the weekly. Again, this is a weekly profile with a 2-hour candle on it. Gives us sort of the best view for some space or some areas of interest. We thought that this thing would just take off and roll over. We did point out 2 areas. We said the upper area of this let's say 4478 on up into that 4500 area, and then of course these 2 areas here, which was the 4375 up into that 4400 area. We said if price gets above that, then we probably will roll up into the next area. Price went in and actually ticked it to the well, almost to the tick up to the top of the area, and then rolled back down. But more important is that we had this amazing rally early in the week, and then it just absolutely rolled over and died. Now, when we look at the other indexes, you'll see that some of them have taken out their lows of the previous week. The NASDAQ has not. So where are the areas and where's the risk in here? Well, the area still is right above this little zone right here. If they come back and test it and they get rejected again, we roll over and we're able to go down in that 4200 area, which we've been identifying here for a few weeks now. Again, if it comes back and starts trading above 4400, most likely we'll roll back up into this next resistance area. So we have to watch that very carefully. Now, I'm going to roll this out a little bit. I'm going to move it so you guys can see this. We have this big congestion area over here from late last year, and we're watching that. Right now, that's holding the market down in the NASDAQ. Okay, if we roll back up and take out the highs, we're going to either bounce around in here or go test the 4739 up there. It's a ways away still. Right now, the market is feeling heavy and it looks weak, and the profile is speaking to the downside right now. So right now, we'll play what the profile is telling us. It's a great tool, gives us all kinds of great edges, and of course helps us identify our risk on it. So let's go take a look at the ES, and there's a little different pattern happening in the ES right now. All right, again, last week we said, hey, watch this this zone up here in that 2080, or excuse me, 2090 area up in the 2097 area. Price poked its head above the previous week and then rolled back over, similar to the NASDAQ, but it has not taken out that the last week's lows, which is not what I say important, but what's important is that we're trading down by the lows of that previous week. So anything, if they can hold it above or below this high volume node right here at 2058 area, then they have a great chance of rolling it down and catching the targets at 2026 and of course 2020. Anything above that and they take out the highs, we go visit the zone up above. Now here's the thing I was talking about, the different pattern. Let's sort of bring this in. I said the NASDAQ was right below the congestion area or the balance area from back in that late or that November into December area. The ES is in that area right now and is bouncing back and forth. This is the caution that I'm talking about. It could get volatile. It could be bouncing. You know, understand what's happening here. The institutions and the bigger time frame players are battling in here for control. You know, the bulls and the bears, if you will, are battling on who's going to take control and either break it out or break it down. And at this point, you know, a lot of people, the pattern traders, are saying, well, gee, look, this is a nice cup and handle. It should be going up. The other pattern traders say, well, this is a nice inverse head and shoulders. You got a shoulder here, and then the head. I disagree with that because that's not a deep enough shoulder to become an actual shoulder. And yes, I see where it could be that it gets rejected on the downside, has a nice rally, consolidates, and then takes another leg up at that point. However, let's take a look at the Russell, and we're going to see something that's very interesting and maybe giving us some clues. The Russell, we said, okay, have to stay below this area that we define. Of course, it rolls right up into that area. And then you know, absolutely rolls over and actually takes out last week's lows. Okay, so let's bring this in and take a look at this. This looks like a lot like the NASDAQ right now. Okay, and we're right below the congestion area of late last year. And now we've taken out the lows. So is the Russell leading us again? Is this telling us that the ES was pretty fat and happy to the upside, and now the Russell is gonna lead us to the downside, along with the NASDAQ doing the same thing? The NASDAQ doesn't have that pattern, if you will. It's not close to busting new highs, while the ES is. So we have a couple indexes that are not even close to their highs, and we have one that is. And we just recently have the Russell that broke to new lows. That's pretty telling to me. Again, the market is feeling pretty heavy in here, and I will tell you that the profiles are, you know, the risk the risk right now is say, hey, listen, place your bets on the short side based on where your risk is. Now, I've had some emails, and these are great questions. Somebody says, okay, well, what do you get into that area? How do you define your entry? How do you get involved? Okay, well, that's a great question. Let's cover that real quick. And by the way, guys, if you have questions, don't hesitate to email us. We love to answer them, help you guys out on this deal. So we came back into that zone right there, and you can use a couple different ways. You can either scale into this zone, in other words, start when you get in, or right at the edge of the zone, add in the middle and add to the top, and then your stop is right up above, your average is in the middle. Now somebody's going to say, well, that's adding to a loser. Not necessarily, because it's a defined area. You want to get involved in the market, but do you want to get involved and wait till it gets in there? It could just touch it and turn over and go down and hit this 4,200, and you would be left without 100 and some odd points of opportunity there. So if you add into this zone and you have an average, let's say at 43.88, and your stop's right above that at like 44.05, okay, you have defined risk there, and that's what we're looking for, is defined risk. If the market rolls back over and then goes down and touches their target at 4,200, that's a great risk reward. If it rolls up and takes you out, hey, you're not hurt. But it should be you should balance that towards your account. You know, obviously you're going to have to work on that as far as how much account I have and how much can I risk, et cetera, et cetera. What we're going to do here is define some areas that you can find some areas where it has low risk, high probability, or high opportunity, should we say. The other area, way of doing it is let's go down to a 5-minute chart. We never recommend taking a trade off of a 5-minute chart. your setup should always come off higher time frames, weekly, monthly, and then even at 2-hour, 4-hour types of situations. So here it is in a 5-minute. You see the market rallies up in that 44.03, and then we have this recent low at 43.80. Pretty easy trigger is that, listen, if it breaks that low, that's your trigger to get involved. Your risk is just right above this. So in this case, you'd be 43.80, looks like 82. Now, isn't that interesting? Because the other way of scaling in from the bottom of this zone to the top of the zone would have left you with a pretty similar entry point. Okay, so it's a matter of preference on how you do it. If you want a trigger down below this, and then of course your stop up above, you see you wouldn't have taken any, well, not really much heat at all, and your stop wouldn't even have been threatening. You would have had a very nice trade, which would have been a multiple of your actual stop, which is key because you have to get a multiple of your stop. We're not here and we don't teach the profile to scalp. We're not scalpers, we're swing traders and position traders, so we look for the larger moves. In this case, a move from 83 down 82 down to this 43.05. That is a very nice 80 point move in the NASDAQ. That's very nice. All right, so if you have questions more about triggers or ways to get in and define stops, go ahead and drop us a note on that. Let's take a look at a couple more markets here as we're going forward. Now, this is interesting. We've been talking about gold for a few weeks now, and let me find my gold here. It sort of disappeared on me, so I apologize. Where'd she go? There she is. All right, gold, we talked about this. We said, hey, listen, if gold gets back, this is a nice flag we talked about for the last couple weeks. Gold busted out of that flag, but it stuck its head out there and got pounded pretty hard. All right, so it comes back inside the consolidation area. It actually, if we really blow this up a little bit, I want you guys to see this. If this thing, let me get my drawing tool here. This thing came back down in the zone, and then you can see here this 2-hour candle had a nice spike up and got just rejected again. All right, that's telling you, hey, listen, there's some sellers in here. Okay, not everybody's into this gold trade to the upside. A lot of people are, but some people are saying, hey, this is not what we believe it's going to do. Now, the risk is above this area of that 1285 right here. Now, if you were fortunate enough to get the trade in here at 1282 with just a little bit, you're in a good trade right now. And we think that there's a great chance, and it's usually a high probability chance, that if we able to roll this over with risk above the 1286 area, 1285, then you have some very nice targets down here. One would be the 1252, 1241, and then of course the test down here of this lower area, which would be the 1230 area. Very small risks for a very large trade. Now, if we start trading above that, then it's going to take you out and may even swing back up and take the 1306 out. We had a very nice balanced week last week with a very nice, actually is a very nice profile here. High volume node at 1272. We get below that, probably going to test the lows, and we may see that. So the risk is defined there. So you guys understand what that looks like sort of after the fact, because this is before the fact, so we want to make sure the areas are defined. But let's take a look at what just happened in the euro. We discussed the same scenario. It's really eerie, how close it is to the gold trade. We had a nice flag on the euro, consolidate, it poked its head up, came back in the range, and what did it do? It went down and tested the low down here. So you could have been able to get involved up here. If you miss it, it's already over, but you could have gotten involved with some risk just above this area here, okay, and been able to hold on to a trade with very small risk to be able to gain a nice trade down to the other side. Now, this thing's still bopping around in here, and we expect it to sort of, mess around. It's probably waiting for some ECB news that's going to happen this week on Thursday. So if you're a euro trader, a dollar trader, any type of currency trader, you're going to keep an eye on that news this week coming out of Europe. But anyway, this is a great example of how a rejection will show you where your risk can be defined and how the profile will help you. It came back in, it consolidated, sort of made that target right here at this lower profile area. And of course, the next week it sort of bopped around in there until she broke her down. And then your defined risk up above that. Now she's down here testing these lows. Probably will roll back into the center of this until there's news from Europe, and then either go up or down from there. If you don't have a position on right now, this is a risky position going into this week if you are trying to put a position on. However, if you're in a position, just manage your risk from this point. All right, let's take a look. One more thing here. We need to look at some crude oil. We talked about this happening. It didn't happen at the right time because timing is important on some things. When we talk about time, it's not, okay, I'm on a 5-minute chart, 10-minute chart. What I'm talking about is the timing of when an event happens. We talked last week, and this is a great example. We said, hey, listen, this thing's sort of getting tired up here. It's made a nice run in crude right now. A lot of people are still bullish on crude, but we weren't going to get long up here. It's too risky. This thing's too far gone for us to get long. However, we could look for a short. We said if the market pokes its head up early in the week and gets rejected, then it could come down, test these lows, and go further from that. The risk reward would be great at that point in time. But what happened this week is, instead of going and testing the highs, they immediately sold off, found support, and rallied to what? Take out those highs at 46.78, and they went up into that 47.04. So they just poked their heads up there just enough to take out the shorts and run their stops, and then roll it over. Now, they didn't roll it over because it was late in the week like you would expect, but we'll see early in the next week's sessions to see if they take that out. Now, where's the risk in here? The risk is above if you're short. It would be below if you're long. We're not interested in being long up here. It's just the risk reward is not great enough. We don't feel like there's more upside at this point. To the downside, yeah, there's an opportunity, but for us, we're going to sit on the sidelines until we maybe get one more push up and see if we can't find something that tells us, and we can find a pattern here within the profile that gives us an opportunity to have better defined risk with better targets. Because right now, the targets would be, if we get a push up in here and we're able to get short, the target is right here at 45, 41 area, and then of course the high profile node at 44.38. That is not enough movement for us. We would want to see a breakdown here. We're not convinced that this thing is ready just to roll over and die, so we're looking for really good risk in here. So keep an eye on that. We're sort of staying away from it this coming week until we see something, and if we do, we'll put a video out. And then one last one here for you on the grains. We've been keeping an eye on the grains. Last week we had the USD report, USDA, excuse me, report. And here's what happened. We talked about the break here. It was very bullish. It was going back and forth, consolidating, knowing that the report was coming up. And of course, the report came out and they absolutely just blitzed this thing into the week, and they finished on the high up here, almost to the tick. Right now, as it stands, this $3.78, $3.79 area is very important. We put a video out, Josh did earlier this week on Twitter, and if you're not following us on Twitter, you should be, talking about the POCs matched up week per week, and then actually if you go down actually a little bit further into the daily profile, the profiles are almost at that level as well. So we've got a defined area. This is the line in the sand for the bulls and the bears on corn. Obviously, it's very bullish in here. Any pullbacks, you can define risk just below this area. Other than that, the targets and sort of the path of least resistance is to the upside to see if they can take out the $3.96 back, 4 weeks ago. Very high probability that that's going to happen. And then you say, where could this thing go from there? We have $3.99. That's sort of the magnet right now, is that high, to see if they can test that high and see how things are going. Right now, the weather's been beautiful in the Midwest. I'm actually in the Midwest. It's been beautiful, corn has been getting plenty of rain in the fields, and I think a lot of people I know in the southern states have gotten the corn in. The corn is getting in right now up in the northern Midwest area, and so it's looking pretty positive. So anyway, I think that's it, guys, for this week. It's been again a volatile week. Just keep an eye on the volatility. If you're not using triggers or some type of mechanism to get into the trade, you may want to consider that. Also understand that it could chop for a little bit longer, so keep your powder dry and find high probability areas. Always tune in to us. Also visit our website, marketprofiletradingacademy.com. Take a look around, register, it's free. There's all kinds of good resources up here, and then absolutely have a great week next week. We'll talk to you then. Take care.